Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedgen Lee with an analysis for oil. I will be using the US oil, the WTI crude chart. This is a weekly semi-log charting, and just visually speaking, is there a real directive, decisive direction? It's kind of melting upwards, yes. But if you look at it from a holistic or totality perspective, it's very sideways to me. Every decline is overlapped by an overlapping rise. Decline, overlapping rise. One can call this maybe 1, 2, 3, 4, and 5, yes. But just because it has 5 waves does not mean that it will be contiguous. In other words, these 5 waves are probably subwaves of maybe a C wave. So to that end, as far back as the charting goes for this, I call this kind of correction from the onset, I call it genesis correction. You quite often see these kind of genesis corrections in the IPOs of some stocks, especially the overhyped stocks. And they get so overhyped, when reality sets in, they can do nothing but correct. So if we call this an ABC, and therefore it's a 3-wave swing, you can see A, B, and 5 waves down. Let's say we can call that W, big W. And everything from here was an ABC, A, B, C. That's where you see the 5 subwaves. And that makes the X. And I think we're on for the Y. You ain't seen nothing yet in oil, I guess. So if we now mark the subwaves of this double combination and call that the ABC 3-wave swing subwave composition of W, and we can do the same thing for X very easily. You can visually see how this is a 1, 2, 3, 1, 2, 3. So A, B, 1, 2, 3, 4, 5, C. And you can, if you want, for good exercise and a practice in Elliott wave counting, delve into the daily chart and label all the subwaves that you want to your content. So if we mark just as a landmark the 5 subwaves for the C of X, it should now be a lot more apparent how these 3-wave swings give rise to placing the larger WX and then soon the Y in the years to come, how they get placed. So if the W and the X are complete, does the Y get above the X? No. The Y is always less or lower than the X. And it has already put in, I'd say, almost half of the price action needed for the Y. So each W and X and Y must have a 3-wave subwave composition. It could be an ABC, it could be a WXY, or even a WXY-XZ triple combination, or complex with a triangle at the end for that Y. But I think for now, simplest would be the best way to keep this. If I say this was a 1, 2, 3A, and we got a 1, 2, 3 B, but is the B finished here, or do we have one more higher high to go? Well, I think it's finished. And then we have a C wave decline. That will bring gasoline back maybe to under $1 if this actually happens. Now let me tell you why I think the B has greater than 50% probability of being complete. First, it's very three-wave-ish looking. Look, ABC. A B wave must be composed of a three-wave family of price sequences: ABC, WXY, and ABCDE, a triangle, which also belongs to the three-wave family, because just about every wave ABCDE is subwave composed by zigzags, except sometimes C wave, which is known to be the wave within a triangle that becomes more complex, become a double or triple. Having said that, we have the very apparent, very clear ABC subwaves of A. Now I'm going to label the subwaves of this red A and call this A, B, C, like that. Visually speaking, even, is very three-wave-ish. That is very corrective, very overlapping. Okay. You can even find the 5 subwaves if we delve down even more of the blue sea. We'll call this 1, WXYXZ, 2, 3, 4, and 5. It all jives very well. Okay? So that A, red A, of Y is complete. And also from a fractal perspective, if you see the down, up, and decline, very sharp declines. So we have a very sharp decline, just like we did here, a three-wave rise, three-wave rise. It may bounce around sideways a little bit, but I think it'll be a sharp decline for C. What I'm trying to point at is the fractal nature of this to the fractal nature of what we're going to see here. Sharp up, sharp, sharp down, up, and we're going to be getting a sharp decline based on my analysis. That's why, using that fractal assessment, I think the B wave is complete. Now this looks very nice. Now, being a sideways action, the number one priority of this kind of price action, lateral price movement, is to do what? Eat time. Consume as much time possible. And thereby, we can even get a little more side actions here too. It may go for, I don't know, a year or so, what have you. But I think this C wave will come very quickly. We have a 1, 2 is already developing, 3, 4, and 5. And if we look at it this way now again, let's go back. We have the W, X, and Y. And this may go, the decline may last until, for the next several years, well into 2023. So overall, if we're looking at it from the X to Y, we are still in a bear market for the crude oil prices. We never really got out of it. And the decline that we saw back in 2008 spooked just about everybody in the oil industry. And the fact that we got a lower low spooked even more people. And I think the coming C wave will be merciless to the bulls. Because this market, this oil market, owes nothing to no bulls. And if we project this even further out, let's say the tendency of a WXY to convert or morph and continue into from a double to a triple is very high. So WXY, we may get an X, maybe rise back into the 50s or 70s. So if we get WXYX, and then the Z will crash it, if that's what happens. But that's a decade or so more, maybe into the future. Having said that, I think the best way to look at this from an Elliott wave perspective is that the declining bear is about to roar again. Now, let's add one more component to this, cycles. Okay? If I draw very roughly, this is a very long cycle of, let's say, I don't know, how many weeks is this? 300 weeks. Very long cycle. Visually you can see the cycles too. Look, right here. You can see the cycles. And if we put in the cycle for this, okay, so on this, it was right translated. Makes sense. It was rising. It was right translated on the subcycles as well. Perfect. That's what's supposed to happen in a bull market. And this was an impulse. And an impulse, since the peak comes at wave 5, it has to be right translated. What I'm saying is that you have to look at the smaller cycles like this. The subcycles is what I'm saying. These were right translated. As you can see, it was onto the right side. And that means it's bullish. Why is that bullish? That means most of the cycle's time is spent in the price rising and not declining. Now let's look at continue on to the cycles to the generation of the wave for red A. Okay, we have another one here, and we've got another one coming right here, I think. And if this is correct, anywhere near close to it, let's say, then what we are seeing is a very good jive of the cycles, saying that we've got a price past the midpoint of the cycle. Okay, not only that, we were not going to get a higher high past 113. That's going to be unlikely in my opinion. That means this is going to be a left translated cycle. In other words, it peaks early, and this is bearish. Why is it bearish? If it peaks on the left side, that means it's going to spend much less time rising and most of the time declining. Okay, so I think for oil, Elliott waves, cycles are pretty much saying some rapidly approaching lower lows in terms of a weekly time frame, not sub-daily, this isn't going to happen tomorrow, although it's well in progress. But from a weekly or multi-year perspective, this bear market is going to not only give a new low, but keep doing it for a few more years. Okay, I hope you found this very thorough, detailed analysis of the oil price chart helpful. Have a great day.